All right, well, let's stay on these meme stocks here because Bed Bath& Beyond is climbing, and it is on really a strong shower so far on the Yahoo Finance trending ticker page this morning. That comes after new interim CEO Sue Gov via a filing after the close yesterday saying she bought more than $200,000 in shares of Bed Bath& Beyond. Now, obviously, Brad, this is a new CEO trying to send a strong signal to a market that if she's putting her own money where her mouth is, she doesn't view Bed Bath & Beyond as going out of business. Like we heard analyst Anthony Chukumba tell us last week when you saw really terrible earnings results from this company, a real liquidity problem, and just an overhaul of the management team and ultimate ouster of now former CEO Mark Tritton. But look, I have a story on Bed Bath's problems now on the Yahoo Finance homepage. Chief among them, she has to raise cash, Brad. It's good that she's out there buying stock, but she has to start alleviating a lot of concerns on Wall Street if this company will even make it to the holiday season. Has to come out and raise cash, whether that's debt or share issuance, has to do that. And also, Brad, I would put forth that she has to start gaining investor support and regaining investor support, notably with the aforementioned Ryan Cohen, who still has a position in Bed Bath Beyond, according to a source that told me that. He's been taking shots at this company for the past week on Twitter, thinly veiled, but still clearly shots at Bed Bath & Beyond. You have to keep one of your key shareholders happy, especially an influencer like Ryan Cohen.
This is not abnormal from CEOs, incoming CEOs, or even interim CEOs to take positions like this. We, of course, saw Howard Schultz of Starbucks, the re-CEO, if you will, also making purchases the second he stepped back into the role. In terms of trying to send a confidence vote, that's what the play is typically. And over the course of time, we've seen this play out a few different times. And 50,000 shares is what she bought at $4.61. And so you're seeing here pre-market, we're sitting at about $4.75. Brings her total shares owned following the transaction to about 105,587 shares. But I think going forward from this point and really thinking through how Bed Bath & Beyond does ensure that it doesn't have to go through an extensive period of sending out those 20% coupons that all of us have received at one point or another in our lives and going through deep discounting. It's moving through inventory is a major issue, and at what price? And then additionally, are you going to be able to still operate the same type of footprint in the environment that more people are actually doing the e-commerce shopping for many of the same products that Bed Bath & Beyond has? And so that is a key competitive issue that they haven't gotten a handle on at this point.
You're right. I think supply chain is something immediate that Sue has to address, and chief among them, they have to start bringing more household name brand merchandise in the stores. You saw a big push by Mark Tritton, now former CEO of Bed Bath, into private label goods to boost profit margins. This was a model that he used very successfully when he was the chief merchant at Target. But still, you cannot fill your store, that type of store, with all private label goods when the shopper has been trained and they want name brand goods. So she has to get that right. And I'll push back, Brad. I'll take the other side of it. I know coupons really have impacted or hurt Bed Bath's profit margins for years, but Sue has to bring them back. And she may want to bring them back in a big way just to try to get that shopper back in the door, because for whatever reason, they're not coming in that stores. Those stores are really empty right now.
But if you're a manufacturer, do you still want to sell the same quantity of inventory into a Bed Bath & Beyond, knowing that in a direct-to-consumer environment, there has been so much of a push to retain your own brand value, if you will, in each one of those products that you don't want to see it discounted at a Kohl's or at a Bed Bath & Beyond. So perhaps that's where you start to cut back on the amount of inventory that you allow to be sold into them. However, again, they're going to be trying to move through any type of inventory that is backlogged and just finally getting into the masses as well to even counter myself there. Well, so that's a serious kind of calculus equation that all manufacturers and the retail partnerships that they work with are going through.
Well, then you go real quick. Then you'll dive into, or just go into, the retail death spiral that we've seen through many retailers with cash problems, notably Sears. And it is very likely you will likely see vendors start to tighten credit terms for merchandise on Bed Bath & Beyond. They exited their quarter with $107 million in cash ahead of the key back-to-school and holiday shopping season. That is not where you want to be. And once they start tightening those credit terms, more cash will start coming out of the door. It feeds on itself. And then ultimately, you probably end up going out of business.
All right, back to school going to be a big time of the year, at least based on the projections that we've seen thus far. We'll see if that holds true.